Hello and good morning out there, all you lovebirds. It is February 14th, 2024. It's Valentine's Day here in the US. So celebrate today with somebody that you love and have a great day out there. But let's dive into our ESDMI analysis and let's get into our recap, and then we'll update our session plan for today. So take a look at what was going on yesterday. We had essentially the ES getting us into a dissonant narrative or dissonant context. We had the CPI number kind of create a bearish line in the sand or a bearish area for us, kind of pushing us down into a bullish list. This was our main list for the actual session. We were paying attention to scenario one being bullish up above that, and scenario two, possible quick breakdown into this neutral area here for the session. And that was kind of the overall landscape, what we were looking at with the ES. Now, something that I had mentioned in the student-only community really was that this list was built around a much higher time frame idea, and the true bullish area really was much larger due to that upper time frame, and it really was this whole entire zone here. But there was an opportunity that a possible deeper pullback might develop, which is what we ended up seeing in the session here, and that's why I had scenario two as a scalping level opportunity to get down into this neutral area before catching some buyers. So let's take a look at where the opportunities were and kind of how this thing played out. So CPI numbers obviously driving us down. Heading into the open, like just before, just prior, we started to see a test of our line in the sand, and we started to come right out of that into the open. Now, whenever it comes to like overall destinations, we didn't get a ton of MFE out of our bullish idea, especially on that first opportunity here. But, you know, we got some. It's what, 68s to 80. So you're looking at about 12 points overall there for just a quick bullish move out of our line in the sand. Then, of course, probably another opportunity coming in as the market was coming down here, coming in around here, and then, of course, coming in around here. And this one not really fizzling out to pretty much nothing, but this one here giving us some really nice MFE, putting us into the high of the day there. There's just no real reference for us there in terms of targeting. It was just a rhythm-based thing. Once you started to see this rhythm developing in the session, kind of down, up, down. This rhythm right here alone was kind of giving you an idea that the session was going to kind of, have this kind of distribution in this section here. But overall, we don't predict. We just follow what we see, the market generated information here. This becomes our high. Really nice move coming out of our line in the sand there to the bullish side of things. And then, we just pick up a sell-off here heading into, midday into the close, with a little peak below our line in the sand here with a scalping level opportunity right here. The acceptance picture really wasn't there around the line in the sand. One of the main reasons why I made this line in the sand as large as it was because of rhythm, was because of the higher time frames, but also because I didn't want people thinking or switching short too quickly, because this whole entire market still was bullish on a much higher time frame. So even like I said in this whole section here, this was still bullish on that upper time frame, and we're starting to see the effects of that coming back out of this lower end here. So yes, a bearish opportunity with a much very short scalp, compromised acceptance, and so forth, almost getting to our neutral area, and then from there just being bought up for the end of the session and overnight. So early in the session, our line in the sand really was or behaved kind of as expected, with opportunities, with good MFE coming out of it. And then from there, we just didn't get any real targets, no real fizzling, or really kind of just fizzled out. We did have a scalp level opportunity, compromised acceptance here to pay attention to, and that was pretty much the story from yesterday. Okay, so now taking a look at what's going on today, we are kind of in the midst of a bullish move here. Bullish line in the sand got moved around a little bit because now we have a bullish area on our lower time frames. So the overall bigger time frame, this is really the whole area here that was bullish on the upper time frame, right? But now we have some short time frames, some lower time frames, giving us opportunity to be a little bit more precise. So our line in the sand is going to be right around here, and we're going to be paying attention to how this plays out during our session, with scenario one being bullish up above, scenario two being bearish down below. Kind of the same thing as what we had going on with scenario two yesterday, where we have a scalp level kind of opportunity to the downside here heading into this neutral area, but definitely a zone to pay attention to and monitor if we get back down in there, because if we get below this neutral zone here, we're going to start to see higher time frame condition shifts and things like that heading down into the next neutral level here. But this would be kind of the overall target for scenario two if it really starts to show a bearish move today. Okay. Now taking a look at scenario 1, a little bit less complexity to the upside here because we have just a neutral area ahead of our line in the sand. But essentially what we're paying attention to here is really just monitoring the upside heading into these neutral destination areas. And this is the overall destination here for the bullish side of things. So if we don't really see a pullback manifest itself back into the line in the sand, we just kind of keep going up. You can use these as kind of little scalps up into this overall destination here. But once we get into this neutral zone, we have some stretch ideas. So in other words, if a pullback never manifests, right? If we never see this pullback all the way back into here and we start holding above this neutral zone, we do have a stretch target just up above here, pretty much into that 50, 76 kind of area, 50, 71s, up into that zone there. So that's just like an alternate plan just in case, a pullback doesn't necessarily manifest itself. We are generally bullish right now, still in the ES, as this market holds up in this zone. If this zone does start to come under pressure and show a lot of weakness, then we definitely are mindful of scenario 2. And then really, if we get below this neutral level, scenario 2 becomes a lot more interesting to the downside with much more bearish pressure with possible condition shifts on some upper time frames. There are some targets, some stretch targets down below here. For scenario 2 really picks up and heats up, heading down into that 48, kind of 82, somewhere in there in that zone. That would be kind of our overall stretch target to the downside, depending on how this day plays out. So with yesterday's volatility, mind everything that's happening around the ES, mind your risk, and have a great trading day out there. But before I go, wanted to do something a little special with today's DMI and offer you a DMI for a couple of other markets. Taking a look at NQ here, we have a similar situation to ES. We have a line in the sand, a little bit larger because of the volatility of the NQ, but essentially this is our main idea here with scenario 1 being bullish up above, scenario 2 being a breakdown underneath here. If we get below this neutral level, much more clear and open space down into that 17,400 level. But right now we are looking to the upside here on the NQ with destinations just overhead with some neutral references. The 17,820s, the 17,900s, and then of course the 17,980s would be those overall destinations there. So if we don't get our pullback, if we get a pullback back into this neutral area here, you can mind that for a neutral inflection heading up back into here. If we get a deeper pullback into the line in the sand, then, you mind the line in the sand for possible destinations up above. And our overall stretch target being this 17,980 level, but really the 17,900 level, this area here, is our main kind of overall destination for our NQ with the short term on the bullish picture here. And then, of course, we have another popular market. Let's go to CL, take a look at what's going on there. CL's interesting, much more interesting, I think, than the indices today. The indices are kind of in a little bit of open space on our shorter time frames, whereas CL, we have, something kind of manifesting itself right now. We have a line in the sand that is a more bullish type of scenario. Scenario 1 being a hold of that, heading straight up into a target area around the 7860s. And that would be kind of the first destination there. There's a lot of open space up above there. So if we get up above, we're pretty much clear in terms of targeting all the way out into that 8180 kind of zone up there. So interesting market, especially if it breaks to the upside, because we could see some trending to the upside and monitoring that particular picture as well. Now, looking at this line in the sand, if we do end up seeing scenario 2 manifest itself, a little bit of a breakdown here, a decent move, a really good idea to the downside. So this line in the sand, I think, is a lot more quality than we're overall seeing in the NQ in the ES. The reason why is because this line in the sand means something to our short time frames and also doesn't overly affect our higher time frames. So if we have our short time frame breakdown here, scenario 2 is a decent opportunity to the downside to head back into some value and get an idea of what's going on back into these areas here. So if we break down, first destination is this neutral area around the 7698s. And then we head down into a bullish zone here. This is a little bit of a higher time frame, but an alternate line in the sand for the session, where scenario 3 is a hold of that, scenario 4 is a breakdown of that. And a very similar type of situation is what we're doing up here with this line in the sand. So looking for holds because that's the overall bias around that section. But if it breaks down, another good opportunity to the downside heading into that 75-65 level for scenario 2. Scenario 3, you would just have to mind this neutral reference here if you get back up above it, heading back up to our line in the sand But if we do get scenario 3 down here, it's important to note that if this upper line in the sand goes down into scenario 2, these two areas become dissonant up against one another, with this one being bearish, this one being bullish. So you have to be paying attention to that particular scenario and be a little bit more cautious in terms of, you know, being too aggressive, overly risking, and things like that into the line in the sands. But both of these zones are pretty important, let's say, to the shorter time frames on this market into the mid time frames for this lower line in the sand. So each one of these kind of presenting good opportunity around the market. But for right now, the what is picture is the current line in the sand, the scenario 1 heading up into here, possibly clearing out up above our more recent swing high here. And then if we get up above there, heading into some trending type of territory for targeting. All right. So that's our full DMI with about 3 markets there. I wanted to give you guys a preview of, you know, some things possibly to come, and just wanted to put this out to the public so people could see, you know, we don't just prep the ES around here. We talk about a lot of different markets and things like that. But we do have some things kind of in the works right now for Apteros that we want to start, you know, pulling back our curtain a little bit, as we've been talking about how to really pull off some of these ideas. So hopefully this is you know, good for everybody, and trade well out there, mind your risk, and let's have a great trading day on Valentine's Day.